Welcome back, traders. Today I'll be taking a look at the prop firm Elite Trader Funding and giving you my honest opinion and comparing them to some of the other prop firms. Before we get started, if you like these types of videos, please give this video a like and subscribe to help this channel grow so I can bring you more and better videos in the future. Now, I've heard other traders mention Elite Trader, but I myself don't know much about their history. I think they're a pretty new player in the prop firm space, starting either in 2022 or 2023. But for this video, I'm just going to concern myself with what they bring to the table. So let's take a look at the evaluations they have to offer. But real quick, I just want to mention with them, you can use NinjaTrader, TraderVate, TradingView, or Rhythmic. These are all very popular, so most likely you'll like using at least one of these. Okay, so Elite Trader offers 5 types of accounts, each with their own rules and account sizes. I'm going to go through each type and give you the differences, then afterwards I'll compare them to each other and give you my opinion on which ones are worth going for and which ones are not. Starting off, we have the one-step evaluations. I'm not sure why it's called one-step because all the other evaluations are one-step as well. Once you hit your profit goal in any of these, you pass and get a funded account, which they call an elite account. It is simulated funding still, but eventually, if you trade well and consistent, they may move you into an elite live account. But let's not get too ahead of ourselves. Let's just talk about the evaluation for now. So all of the evaluations have a 5 minimum trading days requirement. None of these evaluations have a scaling rule. This is simply marketing against other prop firms, and all resets are $75. And like most other prop firms, you don't have to worry about paying for data during the evaluation phase. They do have an activation fee of $80 per month, or you can pay a one-time charge based off the size of your account. Now, this one-time activation fee is not going to be worth it unless you keep your Elite account for more than 3 months. I'll show you these costs later on, but there is an option to go from the monthly payments to the one-time fee, and I think they will give you a slight discount, although I don't know how much. It's best to understand your trading system, and if you're likely to blow your account within 3 months, then the monthly payments will probably be the cheaper option. Now, for the one step, you're going to have intraday trailing drawdown on your highest unrealized profits. I'll have all these numbers in the spreadsheet for you, but they do offer a 50K, 100K, 150K, 250K, and 300K account sizes. Overall, I think the one-step account is pretty easy to understand. Hit the profit goal before hitting the trailing drawdown with at least 5 trading days. One note, the trailing drawdown does not stop, so make sure you keep that in mind and don't forget about it until you hit that profit target. For trading days, any day you place a trade gets counted as a trading day during the evaluation. This will change once we get into the Elite account. In the Elite account, there are going to be more stipulations, but I'll get to that later. For now, let's move on to the EOD, or end of day drawdown account. For the EOD drawdown, they only offer a 50K, 100K, and 150K account sizes. It has many of the same rules as the one-step account, but of course there are going to be a few key differences. Firstly, the drawdown now trails based off of your end-of-day balance rather than your maximum unrealized intraday equity. So there's no risk of you failing the evaluation if your trade is, let's say, $2,000 in unrealized profits, but then it starts going against you and you close out your position at break even. With the end of day drawdown, you're able to hold through retracements and not have to worry about the intraday trailing drawdown failing your account. But of course, they can't make it that easy for you. So they've added a new rule for this account, the daily loss limit. And you've seen this before, and it can be confusing because the unrealized drawdown will count for the daily loss limit, but it is based off your starting balance for the day. So take your starting balance, subtract the daily loss limit, and make sure you never go below that balance in your account throughout the day. The last difference is a couple of the max drawdown numbers are different, but don't worry, I will have this marked out in the spreadsheet, which we'll take a look at later. Now let's talk about the fast track accounts. There are only 2 sizes, 100K and 250K. Essentially, this is the same as the one-step account except for one major difference. They put a time limit on you here. There is a maximum of 14 calendar days allowed for this account, and it's calendar days, not trading days, so you only have 2 weeks to pass this evaluation or you fail. That only gives you 10 potential trading days, even less if you didn't time it right. For example, you open a fast track account on a week with a market holiday. Also, sometimes there aren't many good setups in a week, so a whole week could be a dud, but you still have to meet the 5 trading days minimum requirement. This puts a lot of pressure on you to perform and can often cause you to be off your game and mess up. The only benefit is that if you do pass, you get 1 or 2 months off of your activation fee. Now, if you're not able to pass in 2 weeks, there is an option to roll the account over to a one-step account. You'll have to pay again, but they do say they give you a discount. I'm just not sure how much of a discount they give you. If anyone has experience with this, please let everyone know how much in the comments below. Also, currently for the 100K account, they are doing a 50% off sale, and for across the board, it's going to be a 30% off of the resets. Okay, going to the next account type, static. They only offer a 100K or 150K account size. We've seen a couple other prop firms offer static accounts. The main difference is that there is no trailing drawdown. The max drawdown is static. So for example, the 100K account has a max drawdown of $625. This means you will fail if you go below a balance of $99,375. Even if you make a profit of, let's say, $1,000, so the account balance is now at $101,000, your max drawdown is still going to be at $99,375. So now the amount of drawdown that you have from your current balance is $1,625. Now this is the best type of drawdown to have, but because of that, prop firms give you the least amount of drawdown to start with. Compared with the 3,500 max drawdown from the 100K EOD account, this is less than 1/5 of the starting amount. Besides this, all other rules are the same as the one-step account. Okay, the last account type, diamond hands. There's only one account size, the 100K. This is going to be similar to the EOD account because it does have end-of-day trailing drawdown and a daily loss limit. The amounts for profit target and daily loss limit are different from the EOD account, with both being less. This does make the profit target to drawdown ratio better, but the profit target to daily loss limit ratio is worse. But the main feature of the Diamond Hands evaluation is that you're able to hold trades overnight and over weekends, which you can't do with the other accounts. For all the other accounts, you need to close your trades before market close or you will fail the evaluation. My problem with this account is the daily loss limit is counterproductive with the ability to hold overnight. My guess is this account is made for swing traders who want to hold trades over multiple days, and as we know, the market doesn't just go straight up or down for multiple days on end. It can retrace quite a lot within a few hours or even shorter, so this daily loss limit really prevents you from holding through retracements, as I've said before. So on one hand, this account is made for traders to hold trades, but then the daily loss limit makes you not want to hold trades. These rules just don't synergize with each other. So here's a spreadsheet for all 5 account types. Now I want to mainly focus on the profit and drawdown numbers at the top, but you can also see the cost, and most of the rules are pretty much the same across the board. The purpose of this spreadsheet is to analyze which accounts are worth going for and which to avoid. So starting with the one-step accounts, you can see the 2 largest account sizes both have a profit drawdown ratio greater than 2, making them more difficult to pass and more expensive. Other than that, there's nothing noteworthy, and I will be leaving both of these off of my spreadsheet, but the 50K, 100K, and 150K are all pretty reasonable, with the 50K being the easiest and the 100K being the most difficult of these 3. The end of day accounts add the daily loss limit, so you'll want to make sure you take profits quickly and not risk holding through much retracement. The daily loss limit is around 2%, which is standard, so don't risk more than 2% on the day because you will fail your evaluation if you break this rule. The profit to max drawdown ratio is again reasonable, this time with the 100K account being easier than the 150K. So I'll be keeping this account type on my spreadsheet. The fast track accounts have the same profit and drawdown as the one-step counterparts. As such, I will not be going with the 250K as it is more difficult. It's already very difficult with the time limit of 14 calendar days, and you have to have a minimum of 5 trading days as well. Personally, I don't think the $80 bonus is worth the trouble of having this time limit placed on you, but since you have to trade at least 5 days, it makes it a lot harder and I'm going to leave it off my spreadsheet. I know the fast track is very cheap, but again, it is very difficult with that time limit placed on you. I would just rather go with the one-step account, although it is more expensive. You don't have the added pressure. If they do a sale on the one-step account for like, let's say 65% or more, then the evaluation cost would be less than the fast track at retail. So you could wait for a sale, but I personally would not go for the fast track account. Okay, static account. I think I'm going to leave this one off as well. Even though a static drawdown is the best, prop firms always give you just a small amount of drawdown. As you can see, the profit to drawdown ratio is over 3, which makes this a very difficult evaluation to pass. Plain and simple, nothing more to say. Lastly, we have the Diamond Hands account. The main gimmick for this account is that you're able to hold trades overnight. However, like I said, because they tag on the daily loss limit, holding is very risky, and I think you'd be better off if you just completely ignore this feature altogether. Now, I had initially thought I would leave the Diamond Hands off my spreadsheet because the overnight hold and the daily loss limit did not work well with each other, but if you ignore the overnight hold, this is actually comparable to the 100K EOD account. The Diamond Hands is a little bit cheaper and you have a better profit to drawdown ratio. The downside is you have less daily loss limit to work with, so you'll have to decrease your risk on the day to be less than 1.5%. Also, your max contract size is limited to 2 minis. This is definitely good enough considering their payout structure has a maximum payout limit, which I'll show you later on, but you won't be able to scale up more if you plan to do that in the long term. But for an example trade, let's assume you're able to capture 20 to 50 points in NQ. With $20 per point, this will be about $400 to $1,000 per contract. With 2 contracts, you're looking at a range of $800 to $2,000 profit per trade. Now, when we take a look at the payouts, you'll see this is more than enough and you may even be close to the maximum limit. However, long term, if you're able to get to the 4th payout cycle or the live elite account, you won't have the option to scale up above 2 contracts. So there are trade-offs, but this is very comparable to the 100K EOD account. So surprisingly, I will include this in my spreadsheet. But now, before I compare the elite trader to the other prop firms, I want to go over their payout structure and any additional rules once you're funded. First, let's take a look at the activation fees once you pass the evaluation. You have 2 options, a one-time fee or monthly payments. The monthly payments is going to be $80 across the board, but for the one-time fee, it's going to be based off of your account size. You have to pay more if you choose a 100K or greater account size. So this option is a little bit more favorable for the 50K accounts. In order for this option to be worth it, you'll have to keep your account for 2 months on the 50K one-step account, 3 months for the 50K EOD or the larger one-step accounts, and 4 months for the larger EOD or Diamond Hands account. So depending on how long you're able to trade an account without blowing up, you may prefer one option over the other. Okay, so now let's talk about their payouts. Elite Trader has a weird payout structure, and when I first read through this, I was really confused and I didn't understand it at all. After going through it a few more times, I think I understand it now, but I'm still not confident. So if anyone has experience with their payouts and understand this better, please let us know in the comments, but I'll explain this based off of what I've come to understand. So firstly, Elite Trader sets you up with 4 payout cycles. You could think of these cycles as barriers to entry or mandatory side quests. Each cycle limits you on how much you can withdraw based off of your account size, and you'll need to complete the requirements below in order for you to move to the next cycle. And once you pass the 3rd payout cycle, then you won't have any limits on how much you can withdraw. However, getting there is going to be a tough challenge. Here, if you take a look at the screen, I've converted the max payout amounts into percentages for the 50K, 100K, and 150K account sizes. As you can see, the larger account sizes have a higher max payout dollar amount, but if you go by percentages, the 50K account gives you the biggest bang for your buck. And if you combine this with the fact that the 50K has the best profit to drawdown ratio and lower activation fee, In my opinion, the 50K account is the best to go with for Elite Trader funding. However, if you do make it to the fourth payout cycle, then the larger accounts will make more total profits for the same percent gain, but as you'll soon see, it will be difficult to advance through each cycle. Now, in order to progress through each payout cycle, you'll need to fulfill three requirements. First, you'll need a safety net. This is basically a buffer of your max drawdown plus $100. Also, I forgot to mention you'll have the same type of trailing drawdown in the Elite account as you did during the evaluation. However, it will only trail to a max limit of that initial balance plus $100. Then it will remain static at that $100 minimum account balance. Also, take note that during the payout cycles 1 through 3, you're not allowed to withdraw from your safety net, so you can only withdraw profits above this safety net. The second requirement is to have a certain number of active trading days to be able to access each payout cycle. There are two conditions you need to fulfill in order to receive an active trading day credit. First, you need to have a realized profit of at least $200. So if you make less than $200 or even take a loss in the day, it does not give you credit towards your active trading day. Second, your realized profit must also be at least 23% of your highest daily P&L at the time. This essentially raises the $200 minimum if you profit more than a certain amount, which I calculated to be $869.50, but we can round it up to $870. So if you start making more than $870 in profits on the day, then for future trades, you need to make more than $200 in order to stay within the 23% limit. They give you an example here with only winning trades. Remember, losing trades will not count. So in their example, if you make $1,000 on your first trade, you've already raised your minimum to $230. So the second trade of $230 does count towards your active trade day credits, but the third trade of $200 does not because it is below that 23% limit. Your profits need to be a minimum of $230 from this point onward because of that $1,000 profit on the first trade. Now the next trade of $700 does count, and then the $2,000 profit day, which again raises your minimum to now $460. So the $500 trade does count, however the $400 does not give you credit. So with their system, if you start making more than $870, then you're making it harder on yourself by increasing your minimum profit requirement to get an active trade day credit. And you'll need 15 credits to access the first payout cycle, then another 15 credits for the second cycle, 10 more for the third cycle, and then 10 more to get to the last cycle where you don't need to worry about any more active trade day credits. Now, the last requirement to get a payout is the 40% consistency rule. No more than 40% of your total profits can come from one single trading day. You know how I feel about consistency rules. I don't really like it. It punishes you for having a large profit day. So using the example above, the total profits come to $5,030. 40% of this is going to make it $2,012. So the $2,000 profit on day 5 just barely meets the 40% consistency rule. But if we start taking losses and we can't get our total profits above 5,000, then we won't be able to take a payout because of the 40% consistency rule. Also, in this scenario, we should not make more than $2,000 in one day because, again, this will make it more difficult for us to meet this 40% consistency rule, as well as the 23% rule for an active trading day credit. Now, let's talk a little bit about the Live Elite account before going into my comparison spreadsheet. Like other prop firms, if you trade your funded account consistently and meet the criteria on screen, you'll be offered to transfer to an Elite Live account where you trade real money. They don't give a specific timeline, so this can potentially happen on the first payout cycle, so you may not get to your third or fourth payout cycle. Now, the offer for the Live Elite account is pretty much mandatory, but you do have the option to decline. If you do decide to decline, then you'll have to request a full payout and close out your sim funded account. And it's not exactly clear to me from their website on how much of the profits you actually get back. It sounds like you can request everything except for the $100 minimum account balance, but then down here it says that you're only entitled to receive up to 10% of your earnings, which sounds terrible if I'm reading it right. I sure hope this is a typo or something. Additionally, you'll be restricted from using Elite Trader for 2 years. Also, you must adhere to the safety threshold guidelines, which I'm not 100% sure what this is, but it could be referring to the rule where you can't withdraw from the safety net on pay cycles 1 through 3. If that's really the case, then you could be potentially missing out on $2,000 to $5,000, which is a real shit deal. If you've seen one of my recent updates, I've removed Blue Sky from my spreadsheet because of their $1,000 minimum account balance that you won't have access to. So please let me know in the comments if you know for a fact that this is the case, because I'm considering removing Elite Trader from my list if this is true. But either way, they do seem to punish you a lot if you decline the Live Elite offer. But the last statement here, even if you do accept the offer, you're still not allowed to purchase additional evaluations for up to 2 years. If you do get a Live Elite account, they list out the benefits here. And I do like how there are no more maximum limits for withdrawals. But in my opinion, that should have been the case from the beginning in the Elite account in the funded stage. I also really like the removal of the consistency rules, so you don't have to worry about making too much profit in one day. You can make as much as you want now. There are a few more benefits, but I think these two are the most notable ones. Now, once you're in the Live Elite account, you will be responsible for monthly market data fees. Also, I think you may have additional admin and platform fees that could run you around $300. I heard Trades with Jess talk about that on YouTube, but I wasn't able to find anything on their website for myself. I think Elite Trader is the main prop firm used by Trades with Jess, so definitely check her out if you're interested in this prop firm and let her know I sent you to her channel. She'll definitely be happy to hear that. Also, the Live Elite, I want to mention that the minimum account balance will increase from $100 to $300. Elite Trader does list out some additional rules that they have. Some typical ones are no automated trading, no martingale strategies, and you have to trade at least once a week. Now there is one restriction that I have not seen before, and that's this right here. You're not allowed to use a VPN. This could affect some traders and make Elite Trader a deal breaker for them. For example, traders who trade while they're traveling. And if you're traveling or not, here are the restricted countries for Elite Trader funding. Okay, so now let's get into the comparison spreadsheet. Now I was initially excited to look into Elite Trader funding because even though I didn't know much about them, I saw some popular traders online use them and thought they were going to be a good option. However, after looking into them, I'm actually not very fond of Elite Trader, and I personally think some of the other prop firms are a better option. But let's go through and highlight some of the pros and cons. Starting at the top, let's take a look at the profit goals and drawdown. For this section, Elite Trader is actually pretty good. The profit to drawdown ratio is pretty much standard, and with the 50K account being easier than the 100K and 150K. Although the easiest 50K account is still Apex and my Funded Futures starter account. The starter account also gives you a little bit more wiggle room for the daily loss limit, and I think breaking this rule will just freeze your account until the next day instead of failing your account outright like Elite Trader does. Now, Elite Trader does have the best profit to drawdown ratio for the 100K with the Diamond Hands account, but this account also has the worst daily loss limit. At 1500, this is only 1.5%. Normally, the daily loss limit is at least 2%. So because of this trade-off, I'm actually a little hesitant to call this the easiest 100K challenge, although technically it does have the best profit to drawdown ratio. Last thing to take note of, the 150K one-step account actually has a better profit to drawdown ratio than the 100K account. So this is one of those rare cases where you will consider the larger account size over the smaller one. Now, looking at the costs, they do have some of the highest monthly costs and activation fees, making them the most expensive prop firm on this list. Of course, with sales or discounts, the story can change. They don't have any promos at the moment, but they did have a 70% off sale recently. And just to see if we apply a 70% discount here, you can see it's still a little pricey, but not too bad. It's actually comparable to Topstep's prices. Also, similar to Apex, they have a monthly activation fee of $80 if you don't want to pay for the one-time fee. So that can bring the price down a bit as well, but definitely wait for a sale. Don't pay the full retail price. Now, the rules section is where I'm least happy with Elite Trader. The evaluation is actually not that bad. I don't like the minimum 5 trading days, but that's still okay. But once you get funded, that's when you have to follow a 40% consistency rule. And on top of that, there's a 23% rule where your profits on the day have to be at least 23% of your best day in order to get an active trading day credit. And then you need 15 to 10 of those credits to qualify for a payout request. Now, 15 winning days before you get a payout is pretty tough. You really need to have consistent profitability and the discipline to control your emotions to be patient for that first payout. There are other prop firms that require winning days like Topstep and My Funded Futures starter account, but it's only 5, which is a lot better than 15. Suppose you average 2 to 3 winning days per week. Then with Topstep, you can get a payout close to every 2 weeks. With Elite Trader, you'll have to keep that consistency for 6 weeks, 1.5 months before seeing your first payout. Then, after trading for that long, they put a max payout limit on you. I think with all these rules, the most optimal trading style would be to aim for just a few $100s each trading day. Now, I'm not saying trade every day, but the days you do trade, aim for just a few hundred and try to stay under $870 so that 23% rule doesn't come into play. I don't think Elite Trader will be a good fit for traders that go for a high reward to risk ratio, and I'm talking like more than 2 to 1. Also, if they put you in a live Elite account, the minimum account balance goes up to $300, so another $200 that you're missing out on. And lastly, I do use a VPN, so this no VPN rule actually does affect me, and is another reason why I don't think Elite Trader is a good fit for me personally. And there you have it, my breakdown of Elite Trader funding. Overall, they're not too bad, but they are expensive, so without any discounts, I think you have other better options. They don't actually have a lot of rules for the evaluation, but once you get funded, you want to make sure you understand all the additional rules, especially for payouts. I think they are best suited for the trading styles that have a high win percentage and take small gains consistently. But that's going to do it for me this time. I hope this has helped you out and that you've taken away something of value. You can help me out by giving this video a like and smashing the subscribe button for future videos like this one. But until next time, good luck and safe trading.